They could go into 4 something, 5 something, who knows. Charles Payne, the Making Money hit host on Fox Business, joins us. Susan Lee as well, Fox Business correspondent. Charles, like I say, I mean, those of a certain age, not you're old, my friend, but I can leave Susan out of this. She doesn't even remember those much higher rates, but they are getting higher. How much higher, do you think?
They won't get to the point where you'll have to change this. We could do the same segment next year, and it will still be relevant. But to your other point,
gotcha.
To your other point, though, like if you're just new to the housing market, a 4%, 5% will feel pretty high. I don't think it'll get that high. I think maybe 4%. But you know what's really amazing, Neil? Right now, someone could buy a very expensive house. And because rates are so low, actually have a monthly payment much lower than someone who had a far less expensive house 5-10 years ago. One of the reasons the housing market is booming, so it's critical that they don't get too high, that these mortgage rates don't get too high.
Now, you're very young, Susan. I mean, does this sort of stuff scare you off? Do you think, oh, man, I missed the boat?
Yeah, so we can't remember 18%, but I can tell you that the millennials and the Gen Zs, they look at it a year ago, and oh, by the way, we were paying 2.65%, and that's really what's been driving the housing market, right? You saw record home prices that we saw in October. That's also driving the wealth effect in the markets as well. So if I feel richer from my home values going up a lot, by the way, over the past 2 years, I'm going to go out and spend more, and that's been helping power the U.S. economy.
You know, it looks like the Federal Reserve, Charles, is poised to maybe raise rates a lot sooner, maybe a lot faster this year. How would that affect, mortgages and the rest? Some of these are pegged to market rates, so it's possible that market rates stay fairly sanguine. But what do you think?
I'm glad you brought that up because Susan talked about the wealth effect. Stock market, housing market, those are things that the Fed really wants to work out. Even that communique they put out yesterday, they talked about markets a lot. I'm in the camp, maybe the 10-year yield gets up to 2.5%. But, these mortgages based off the 30-year, I don't think they're going to move that much. Now, they'll go higher, there's no doubt about it. And there'll be a psychological factor initially. But also, we could get a sense that if anyone has been holding out, that the train is leaving the station. So oddly enough, you might actually spur some folks who have been sitting on the fence. But the Fed is in a pickle, right? They are in a serious pickle. They created this pickle, and I'm not sure how they're going to get out of it. But I just don't think what Wall Street saw yesterday that scared the heck out of this market, I don't think that's going to come to fruition.
Yeah, we saw it again today play out, particularly in technology stocks, Susan. And they are indirectly, disproportionately hit when rates even inch up. Is that overkill?
Well, yeah, hedge funds actually selling off the most technology shares in a decade, in 10 years. And now all of a sudden they're underweight some of these mega cap names that have taken the stock markets up to these record levels. I think Wall Street forgets that times of rising interest rates are actually good for the stock markets. You've been up 5 out of the last 6 periods, right? And by the way, there is a premium for American exceptionalism that has been priced into the market. America has outperformed the rest of the market for the past 4 years. Apple, a great example of that. $3 trillion. First company to ever cross that threshold this week. And $3 trillion, by the way, Neil, that's more than the entire stocks put together traded on the London Stock Exchange. Yeah,
that's more than Charles Payne is worth for the last time. Close. It's very close. But,
just a little bit.
Yes.
Just a little bit. Charles, I'm just wondering, the Fed has never, if you think about it, been able to orchestrate a soft landing. It's always bumpy. Right. It gets done, when all is said and done, but it's generally not for the faint of heart. What do you see happening?
Real market purists, real economic purists, economists who really study this stuff, particularly Austria, the Austrian School of Economics, they don't feel like they've ever engineered a soft landing. All they've ever done is re-engineered Fed money printing, and that's what they're going to probably do this time. They'll try. The markets will go wacky. They'll get afraid, and some reason they'll find another reason to start pumping the cash back into the system.
I'm so glad you got the Austrian angle in there, so we got that taken care of.
Hey, see, with American exceptionalism, I had to do something.
No, I know. No. You are exactly right. Guys, I want to thank you both, the stars of Fox Business, which if you don't get, demand. Of course, you're